In just 24 hours, markets will reopen and rattled investors are going to start to assess the fallout of the second largest bank collapse in U.S. history. Silicon Valley Bank is now under the control of the FDIC after panic among its customers set off a bank run. And this morning, Treasury Secretary Janet Yellen is suggesting that the government won't bail that bank out. Joining me now is the former top economic advisor to then President Trump, now the vice chairman of IBM, Gary Cohn. Good morning, Gary, and thanks for being here. I just want to start with where you think things went wrong here for SVB.
Well, good morning, and thank you for having me. In many respects, what we're living through today is a very traditional bank run. And by that, I mean we're going through a situation where depositors are trying to withdraw their savings from their bank's account at SVB, and the bank does not have the adequate liquidity to allow customers to take their money out of the bank all at once. This is the way banks are designed. Banks take in a lot of deposits and they invest them and they reinvest them in the economy, which we have to understand is very important. As banks take in deposits, they reinvest them into people's mortgages, into credit cards, into automobile loans. So, this is the traditional way that banks work. They hold some money aside for daily liquidity, but traditionally, very small percentage of the deposits actually go out of the bank each day. But when a bank is perceived to have lost confidence with its customers want to get their money out of a bank, out of a financial institution, and the withdrawals sort of compound upon each other. And I think that's exactly what we've seen at Silicon Valley Bank. And as the need to withdraw or the want to withdraw has compounded, the bank just does not have the liquidity to allow those customers to take their money out of the bank.
So what's the right response here? If you were still in the White House, would you advocate for a bailout?
So remember, depositors are protected on the first $250,000 of their deposits. We have something called the FDIC here in the United States, which is the Depository Insurance Corporation. So those deposits are protected. I would advocate that all of the depositors get their money out of the bank. Something has to be done to allow depositors to get out of their bank. In the history of the United States, there have been very few banks that have not been able to deliver depositors back 100% of their money. And in those cases, it has been very, very unique situations. Something much more catastrophic than a bank run. It's been something fraudulent or something that's been done very harmful to the shareholders or to the depositors, where it was well beyond what should happen. This is a normal bank running under normal conditions that was highly capitalized, where depositors should not become the victim of this run on the bank.
Well, given that, there's a lot of them that had over $250,000. I think that's the concern. I mean, we heard from Nikki Haley, your former colleague. She said it's not the responsibility of the American taxpayer to step in here.
Well, I think we have to understand how important banking is to the U.S. economy. We want to encourage citizens to keep their monies in banks because we do run a circular economy, as I said. When money goes in the bank, it gets relent into the economy to consumers. Yes, this was a bank where the vast majority of the deposits were not insured. But if you look what this bank also did, this bank ran massive payrolls for many companies. So companies would put their money into the bank, and then during the course of the week or the course of the month, that money would be paid out to hardworking Americans as payroll money. If the bank goes under and that money's not there, those companies don't have money for payroll. I don't think that's the situation that we want to put hardworking Americans in, that they can't get their payroll because their company put the money into a bank that just happened to have a run on it in that window while their payroll dollars were sitting there. So I do think we as a country have some obligation to make sure our banking system is safe. Remember, we do regulate banks at the federal level, and these banks do come under massive scrutiny. So to run away from these financial institutions when they go through a difficult time is not the right answer.
Okay, so you do favor helping them out. On the question of what happens tomorrow, if the markets open and they have not been acquired, how bad do you think that could be?
Well, look, the regulators are hard at work right now, as they should be. It appears to me that the FDIC got involved probably Thursday night. They shut the bank down Friday, which is exactly what they should be doing. They've had all weekend to be involved with the bank right now. They are going through their normal activity. I mean, we have seen this play out many times in the past where the regulators take the weekend, they evaluate what's going on. And today, what's different than what we've seen in the past, the last time we really went through a situation like this was 2008. In 2008, the regulators did not have nearly as a robust toolbox as they have today. Today, the regulators have enormous tools at their disposal. They have enormous discretion to go through and really do whatever they want in this situation.
Yeah.
So I'm cautiously optimistic that they will use their tools, they will use their discretion, and we will hear something later in the day what they have done with the Silicon Valley Bank.
Well, on that front, can I get you to respond to a statement that we heard from Senator Elizabeth Warren yesterday, who said President Trump and congressional Republicans' decision to roll back Dodd-Frank's too-big-to-fail rules for banks like SVB, reducing both oversight and capital requirements, contributed to this costly collapse. Obviously, you were in the administration when those rules were rolled back. Is she right? Was it a mistake to roll them back, or do you disagree with her?
Well, let's start to what happened here and what rules got rolled back. What we're talking about was some legislation that worked its way through the Congress that, when it went through the Senate, needed 60 votes. And in fact, this piece of legislation got 2/3 of the votes in the United States Senate. So it was a very bipartisan piece of legislation. And what the legislation was, it was a piece of legislation that says, hey, we as a U.S. government, we want many banks in this country. Therefore, we are not going to put every bank under the highest, most stringent rules and regulations that we have in this country. We will have a lower level of rules and regulations for smaller banks around the country because we want to encourage more banks to be in business. And I think that has been a good piece of legislation. And in fact, I don't think there's anything in this piece of legislation that would have changed the outcome had it not existed in what happened in Silicon Valley Bank. Banks still have very high capital levels. And you can't tell me that anything would have changed had this piece of legislation not gone through.
Okay, good to get your response. So you disagree with her on that. We wanted you to respond to that. Also, Gary, before I let you go, obviously you used to work for the Trump administration. Last night there was this dinner here in Washington, the Gridiron Dinner, that Vice President Pence, who you also served with, spoke out at. And he delivered his strongest rebuke yet of your former boss, former President Trump, saying that I know that history will hold Donald Trump accountable for that day, referring to January 6th. Do you agree with him?
Yes, I agree with him. Look, that was a shocking day in the history of this country. We continue to be reminded about January 6th, and I think we will all live with it and all live with the memories of what happened on January 6th. I agree with him.
Are you going to support Trump? He's running for president again.
These days, all I'm thinking about is banks and bank regulation, to be honest with you. But in the bigger picture, we are just starting down the path of a election cycle. We are just starting to see what candidates and who wants to be involved on both sides. And I think, like most Americans in this country, we want to understand who our alternatives are, who the candidates are. We want to understand what they stand for and what they're advocating. And like all Americans, I'm going to look and evaluate the candidates and make a decision based on that.
All right, Gary Cohn, great perspective on the SVB collapse. Thank you so much for joining us this morning.
Thank you for having me.